Good morning, traders. It is 8 a.m. Chicago time on Wednesday, the 8th of March, 2023. This is episode number 2425. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's hop on over to our convergent trading pre-market summary sheet here. Again, we have Fed's Chair Powell just released a text to the House, the U.S. House of Representatives, as he testifies to Congress. Same remarks as yesterday, same expectations. The only X factor here is if a representative asks a question that teases out an answer that the market didn't expect. So that's right, Groundhog's Day today in the markets. So completely balanced profile, relatively active volume though. If you look at the volume, 263,000 in the S&P versus 280,000 being the mode, it's a lot more elevated than yesterday. So hawkish Powell testimony yesterday. Powell basically, yesterday all Powell said was that the terminal rate may be higher, and the Fed being completely data driven now, the Fed may have to put 50 basis points back on the table. Nothing too serious really, but the market immediately sold off as if we didn't know this already, since the dot plot was already pricing in 5.65, I think, percent on the peak. So it's puzzling to me, but whatever. It is what it is. We'll trade what volatility the market yields. BOE's Dingra. Over tightening poses more material risk at this point. Jobs data today ahead of Friday's U.S. jobs report. U.S. House Speaker McCarthy confirmed plans to meet with Taiwanese President Tsai. The ADP report came out this morning, 242,000 versus 200,000. As a reminder, Friday, the non-farm payrolls are expected at 203,000 with a forecast of 210. Unemployment rate is supposed to remain at 3.4. So ADP was expecting the same or similar this morning at 200,000, came in at 242,000. The catch with ADP employment change, which came out about an hour ago or 45 minutes ago, is that it has not been correlating well with the non-farm payrolls that come out on Friday. What's more important today, though, is the JOLTS job openings report. The prior is 11.012 million jobs that are still open and unfilled in the United States. The expectation today is 10.5. The Fed is looking for that number to drop. The Fed is looking, so the market will be looking for less than 10.5 or 10.5. The Fed's paying close attention to this. The problem with this report is it's from January, not February, so it's a little bit stale, but still it's an input into the Fed's actions for March. So that's where we stand. The Fed's chair will start talking at 10. The Bank of Canada has its interest rate decision at 10 as well, and we have the regular crude oil inventories from EIA at 10:30, and the crop report from Beeks at 12 p.m. today, the crop report at 12, and then the Chinese CPI, very important this evening if you trade the Chinese, the Asian session or the Asian Open. The Chinese inflation rate year on year is expected at 1.9%. That comes out this evening. PPI also comes out at the same time, expected at negative 1.3%. So lots of room for the Chinese government to stimulate its economy. Again, the S&P completely balanced, has traded 266,000 contracts and has only gotten 18.5 points yesterday. We had about 13.25, 13.5 points on the overnight session. and the point of control is shifted back 39.90. We're accepting lower prices. The point of control of yesterday's RTH session is around 39.90. So the overnight session and yesterday's day session, and the magnet in this area, has been 39.8850. So all yesterday accomplished was to move from the upper bounce to the lower bounce. We'll look at that in a second here. Here's what was expected yesterday real quick. Remember, coming in, I talked about how this up here seems like a failed auction or liquidity check, liquidity sweep, whatever secret language you have. But this is a failed auction. This is the market trying to push through to that 40, 90, 50, which is the next key level up. A double TPO high, and it was not able to. It got to 81 or whatever it was, 81, 82, and it immediately sold off back into this range. And what I talked about yesterday is it's very, very likely to break down and check 40.20 right here, this box 40.20, expecting a pause of 40.20 with a potential push down into the 4,000 area. The key millennial figure here at 4,000, that was expected yesterday. Very much leaning to the short side, as the market has clearly indicated to me that it was not able to hold those higher prices. Anything above 40.65 or so was pretty swiftly rejected day before yesterday. So this isn't too hard to see. Let's take a look at the TPO chart here just to get back in alignment. And that's, we talked about how we had these weak structures, and that if it breaks through to the downside yesterday, that these weak structures are likely to get filled. I think the lowest single was at 40.24, maybe 40.22, something like that. And we accomplished that. So what we had in yesterday, despite the fact that we weren't used to the activity, what we had in yesterday is perfectly normal, and it's exactly what was expected to happen. I talked quite a bit about it yesterday. And so what we've done also, though, is we've gone all the way through the 4,000, which is interesting. And then we filled in the gap, and we came right back to the MC point of control, which I really didn't expect us to get all that done all in yesterday's range, although the range stats for yesterday were quite normal. The S&P closed below 2 Vol Sigma yesterday. Very impulsive day to the downside, and the expectation is it's very likely to any attempt to push higher back to 4,000, for example. It's sitting at 39.90, which is yesterday's settlement. Yesterday's point of control, this morning's overnight point of control, and the MC point of control. So you're getting the gist of this, right? There is a lot going on in this area, and it says acceptance. This is a highly, highly accepted area where we're trading right now. So coming in as a trader, what does that mean to you as a trader? Acceptance, all these fancy words. Coming in as a trader, you should immediately hear and know, oh, acceptance. Okay, I make money when there's a price advantage, or there's a mispricing in the auction. Then and if it's sitting here and it's accepting the heck out of this price, again, I'll repeat, yesterday's settlement, yesterday's volume point of control, the overnight volume point of control, the overnight full session the full session mid, full session VWAP, and the micro composite point of control, the most balanced price in this region, all sitting here at 39.90, 39.8850, and we are currently trading at 39.8850. So to you as a trader, you don't treat this like yesterday or the day before, whatever. or we don't treat it like the market is opening in a gap, which automatically says imbalance. There's always an opportunity when there's a gap, right? It may not move, but it's an opportunity. It's a mispricing. Today, there's no mispricing. So what I would do if you were working for me as a prop trader, I would say keep your hands off the damn mouse in the morning, just like I did yesterday. Keep your hands off the mouse. Let the market establish the winner here, and then there will be plenty of room to get on and do something with the day. The alternative is it looks like it's bouncing, it looks like it's breaking lower, it does not, you lose money, and then you're spending your entire day trying to make that single full stop out back. And it becomes about dollars, it becomes about P&L, and the market's saying that there's not much going on here. Now, what's his name could surprise us. Jerome Powell could surprise us. Here's that MC point of control right here. See that? It's very prominent. If I could pull in more bars here, you will see that it just gets more and more prominent. But in this area, this is the big kahuna. This is the big price. I'm expecting a lot of this today. Now, I'm going to tell you that any test higher, I'm going to be very, very critical of, because we did close under the 2 Vol Sigma yesterday. We had an impulsive day down. I expect a continuation day, of course, unless Powell comes out and he says, you know what I said yesterday about 50 basis points? Forget about that. I was wrong. We're probably just going to hold here. Then the market will rip up. But otherwise, the status quo says that the market is pricing in an impulse here, and I expect some sort of continuation to the downside. The next key area is 39.70, 39.70, 39.65, and then we hit the 39.50 if you recall from Bostic. So it brings us back to Bostic's comments last week at 39.50. The SOC for the Fed yesterday was 40, 50, 50. Nice, right? Nice symmetry there. It's like over the fall we had 39.20, 38.20, 37.20, 4,020. Now it's the 50s. So that's the SOC that remains open at 50.50. Down here, that's the extended target, but today really not expecting it through the much past the 70. I'm expecting it to be a pretty choppy day. But what's important is any push up today is going to be scrutinized. I'm going to look to the order flow to see if the lifting is being absorbed, or if sellers are backing away scared and allowing price to come up on very little delta. If we get good delta, good buying delta, but price isn't following through because there's a lot of supply, then I'm going to look to the short back to 39.88 on a push higher. Okay, so you got to be careful around the century figure here, the 4,000 number, but any push up today is likely to be looked at as an opportunity to get short. This is one wicked head and shoulder formation here, right? So that's what I've got. Not much else to say other than for the ES, it's pretty sideways. I mean, we had some large delta selling earlier. You could see them here, the yellow, some large, but very large delta selling, but large deltas are buying, and the delta, the cumulative delta is sitting kind of sideways. I'm not seeing a skew here. The Nasdaq, same thing, very large deltas selling, large deltas buying, small deltas selling, but generally I would expect this the cumulative delta to go back to zero. The Nasdaq's in the same posture. It's just trading around yesterday's settlement. Not much to do there. Looking at crude, very interesting. A report came out from the census this morning. that said that crude oil exports fell to 3.51 million barrels per day in January versus 3.84 million barrels per day in December. This is seen as lower demand, and crude immediately exploded to the downside. Well, not exploded. It just dropped about $1.90, something like that. Crude, the key number is 77.50. That's the key over under for crude. And yesterday we settled at 77.58 with a point of control at 77.50 or so. So 77.50 remains in crude, remains the key over underline, and it's been for literally months. The 77.50 area, this key over under, has been in play here for quite some time, and yesterday we closed right at it. This morning we tested it from below and are falling away, and now we're just looking for what does it do at the 76 area. Crude's been very methodical in my opinion. It's been very orderly in its auction. It did finish with a very strong bullish tilt on Monday, and then yesterday it tried to recover and then just ended up exploding to the downside. Crude also closed below 2 Vol Sigma, and the expectation for crude as we settled yesterday at 130 Central is that it is likely to continue lower to explore this weak profile. You're a weak profile here. So this is a weak profile that's being tested all the way down, and I'm looking for 76 next. Okay, that's the plan for today. Look for just be patient today. Just don't go nuts. Be patient and wait for things to set up early on. There's no sense in stepping in front of Powell. A quick reminder once again that tomorrow 1 p.m. Eastern we're going to have Mr. Jared Tendler, performance coach extraordinaire. He's going to be on to talk about trading confidence. Okay, how do you get confident about what you're doing? How do you regain your confidence after big losses? How do you keep your confidence if you're not making progress with your trading, and so on? So we have some scenarios to discuss with him, and he's going to share some practical steps you might take. If you have not read Jared's book, it's a keeper. It's more important than Mark Douglas's work and so on. Okay, so check it out. It'll be on YouTube. No registration required. Go to ct.pro/unleash-confidence lowercase, and that'll send you to YouTube, and you can set a reminder over there, or just show up at 1 p.m. Eastern tomorrow. We'll be talking. Good luck.